Good evening, everyone, and thanks for joining. We'll maybe give it another minute before we begin. Perfect. I think we can start. Good evening, everyone, and thank you for joining us today evening. We are very fortunate to have Mr. Soumik Bhusan with us. He's a CA by trade. He's currently the CFO at Cocoblu. He's had a very renowned career over the last 15 years across Goldman Sachs, Titan, and Macmillan. CA by trade, and now very recently he has completed his PhD from IIM Ranchi. So welcome, Soumik. Just before you introduce
Thank you.
yourself, maybe to people who are listening to us for the first time, AltCraft is an alternate investment platform. We provide various fixed income opportunities for people to participate in. They range from government securities, bonds, invoice discounting, leasing to venture debt. So you can come and build a fixed income portfolio. We have now been operational for about 2 years, have a track record of about 3,000 crores. So do check out the platform. Soumik, welcome once again. And maybe if I can request you to introduce yourself to the audience, please.
Yeah, thanks, Prateek, for the overwhelming welcome. I'm a as Prateek said, so I've been in the industry for close to now 20 years. I've spent my most of the time in retail. To start with retail, I worked with Reliance Trends, followed by Titan. Then had a stint in Dubai for being a controller for Bloomingdale's department store, and then worked with one of the largest e-commerce players in India, and then now I'm working as a CFO of Cocoblu Retail. And yeah, I mean, over time I have seen some other industries as well, but I think retail is something which I really enjoyed, and I see there's a lot in there to learn, as well as I see a huge potential in this particular business line. Now coming to Cocoblu, I'll just first start how Cocoblu is set up, right? So Cocoblu is a 100% subsidiary of Ratan India Enterprise. Ratan India Enterprise is a listed entity, and it has got 4 verticals, starting with e-commerce, their electric vehicles, and drones, and also in fintech. So Cocoblu falls into this retail arm, and we are one of the significant contributor to the overall group's top line. Now, Cocoblu started its operation in Feb, and to be very precise, our first sale happened on 24th of Feb 2022, and that was one of the office product, right, where we first started our operations with. So when we started, we had onboarded 3 categories, which are office products, uh, musical instruments, and wireless accessories. And after we scaled up slowly, within 2 months, we then onboarded apparel, shoes, and books. So we currently handle these 6 categories. And while our first month, and March and up to April, it has taken time for us to set up. But once we had set up, I think we have seen our daily sales, even starting with 1 lakh a day to moving to 10 crore a day. And now, currently, we are almost doing 13 crore a day, right? So what I always, say is that in this e-commerce market, there are days when, business goes as usual. But of course, there are days where, where there are event sales, right? Where there could be, some, event like a kind of Independence Day sale or a Republic Day sale, which is, spread out across the entire market. So typically in those days, we see, like a 2x spike on the run rate, right? So if you do basic maths, just for the sake of simplicity, I am taking 10 crore a day, right? So generally 310 days of the 365 days of a year are the days when, business as, kind of usual, right? Which is like ongoing, people keep on buying and all. On the balance 55 days, we typically see a 2x spike, right? So if you multiply this, 300 days into 10, right, we will get 3,100. And if you multiply this 20 into 55, you'll get 1,100, right? So that will add up to 4,200. That's what, our annualized top line of Cocoblu has been when we started, right? Now, as I said, this 10 crore has become, kind of 13 crore, and we expect, this, run rate to go on. And because we are a, part of a listed entity will, all the numbers are there on the public forum, right? So as we speak, right, for the financial year, if I look at the published results for the 9 months for the quarter ended FY24, we have done 4,233 CR, right? And uh, I'm just calling it out, and which is like almost like a 40% growth from the last year, right? And if I try to translate into the how this number is generated, as I say that we are into the six categories, right? And the six categories, apparel, shoes, wireless accessories are the larger ones, where these categories typically give us around 20-25% share of the overall top line, followed by books, and the office products and musical instruments give us around 5% or 3% on an average, right? So that's how our business mix is out in. And just to give you the scale at which we operate, so first is that on a daily basis we do 3 lakh orders, right? And if you translate into the number of orders per second, we are actually getting close to 3.5 to 4 orders per second. And now, if translate into the number of, if you translate into for full year, for a full year, so Cocoblu possibly does 16 crore orders, right, in a full year, right? That's the scale. Now, in order to do this scale, the number of unique items which Cocoblu, possibly sells on the online e-commerce, it is 40 lakh plus, which essentially means that across the six categories, we have got 40 lakh unique SKUs which is offered to the customer. Because we are um, fairly large, we are able to also leverage the supply chain network of the online marketplace, and we are able to also keep the product very close to the customer, which essentially means that most of the orders which we deliver are also fast track orders, meaning like if you order today, you'll possibly get either today or tomorrow. Right. So we have the capability to fulfill 20,000 plus pin codes across India, and I think we are able to fulfill wherever the delivery is open. I mean, of course, there are some pin codes which are restricted, which are maybe the military zones and so on, but we have the capability to service all the pin codes, right? We have tied up with close to 100 plus fulfillment centers where our products are housed. Now to keep the selection uh, continually improving and so on, we have 1,000 plus active vendors, right, with whom we work. All the large vendors in the six categories, you name any, would be our partners. Now to give you some customer backwards, kind of input, right? We are, 5-star rated on the platform. We have got close to 56,000 reviews, which are mostly positive. And of course, to run at scale, we have a robust technology platform to which we can manage the scale. And I have already explained the scale. Now, when you think about 40 lakh unique ASINs, building the capability to fulfill 20,000 odd pin codes, when you are getting orders, which is 4 orders per second, right? And six different categories. Each category are different or nuanced from their the way the category operates. Some are long tail categories, some are fast moving categories. That's the scale or the ability which Cocoblu has to kind of deliver the customer satisfaction. Um, right. So now kind of coming back into the, I have already explained the, kind of top line. Those numbers are already in public. You can always check that. We are a profitable, company, from possibly day one, right? I'm just ignoring the first 1 month when we were, kind of creating the company and so on, right? We are, operating with a working capital of, close to 850 odd, crore, right? And if you see the inventory levels over time, we have been very efficient in terms of deploying the working capital of the inventory, because uh, we have done, possibly higher levels of sales with a lower inventory level. If you just look into our financials of, say, quarter ended December 2023 versus quarter ended, December 2022, right? And if you translate that into numbers, we are possibly at a stock turn of close to 4 times, right? Which is I believe would be very good if you compare the retail kind of industry, right? So that's broadly about it, and happy to take any questions or any clarification. So I'll take a pause maybe, and
No,
feel free
this,
to ask a question, Pratik. Yeah, if
yeah, this was very useful. Thanks for that. I think to our audience, if you have any questions, please do use the Q&A box and you can type in your questions. Maybe Soumik, Cocoblu has scaled really well as you pointed out from Feb 22 to now in about 2 years to a top line of more than 4,000 crores. But what's been the secret sauce to onboard so many vendors across these six categories to get them up and going to a fantastic run rate of about 4 orders per second?
yeah, I think the secret sauce lies in the process, people and tech, right? These are the three great levers, right? So I'll start with process, right? So Cocoblu, by design, is very process oriented, right? We believe in something which are called as mechanisms, in the way that we believe there are some inputs, and there is a system which has to deliver the inputs and which should deliver an output. And there's a process where we keep on checking and auditing if this system is working or not, right? Say, for instance, in order to onboard a vendor, we have a team, right, which is dedicatedly working on to onboard a vendor. When you onboard a vendor, it is not only the vendors, just onboarding their PAN or GST and so on, because then the vendor is offering a selection, which means that, say, the vendor is offering, say, 20,000 unique SKUs. We literally have to ensure that cataloging is done. There's the right image, there's the right, quality, there's the right kind of description, so that any customer who are trying to search a particular product, which is owned by that particular brand, they're able to get the right level of detail, right? So there's a very in-depth process through which each of these, I would say, artifacts work, right? And Cocoblu is very strong in that process, because we have got people who can operate at scale, because most of them are qualified to handle technology and other advanced tools. That is one, right? And then, of course, this layers on to the people, right? So Cocoblu, when we started, we are at broadly 10 or 20 people. Now we are 200 plus, right? And most of these people have an average stint in any retail companies, right? And they know the overall ecosystem. They know how the process should work. And the third part is technology, right? So Cocoblu has also their internal tools, right, which have the capability to run at scale. There are AI and ML tools which helps us to understand that what product I should place a PO for, how many units, and where I should keep the particular product. So the customer's satisfaction is the key. So in essence, what I'm trying to say is that we always look at the customer experience and work backwards. And if it means that we have to do XYZ things, uh, uh, we just ensure that each one of us in the organization just performs that, because as they say, right, it's easier to lose a trust than to win. So we know that if we have delivered some customer experience, we can only raise the bar and not kind of reduce the bar.
Absolutely. Absolutely. Uh, the second quick question is, when you have so many vendors, I'm sure there are a few established one, there is a long tail one. How do you actually onboard a vendor? What are the kind of checks that you do? And what are some of the criteria that you might follow?
So see, for us, like in any organization, there will be couple of vendors which say, say, as I mentioned, there are 1,000 odd vendors, right? Possibly 80% contributing, the number of vendors which possibly contribute to 80-85% of my total top line will be around kind of 200 plus, right? So for those, based on the org structure, there are vendor managers, there are, the entire vendor management team across these six categories, right? Right. And whereas, when you have this long tail ones, and there's a mass vendor kind of a relationship team, which, ensures the onboarding of these small and medium enterprises, right? While the quality of the onboarding doesn't change, right? The method in which it is done is little different, right? In the sense that, of course, when you have a very large vendor, you need a person, maybe one vendor manager will handle maybe 5 accounts. Whereas in this small scale, right, maybe the account manager will handle maybe 20 accounts, right? So the service offering or the delivery in which the vendor has to onboard kind of doesn't change, right? Now the checks and balances which we have is in this, right? I mean, uh, of course, right? I mean, there are the basic compliance checks which we do that goes without saying, right? And of course, when and the other thing, as I mentioned, we believe in people, right? We always believe that the person who is entrusted to do a job is capable of doing, right? So one of the key ways how we operate, right? We first believe in inputs, right? We believe that if I don't get my inputs right, I'll never get an output. So I know that if a customer is searching for any product, right, the first thing is that they will say, for example, this is something which I always give an example for. Say, you know that you want maybe a white shirt of a brand X, right? Uh, Despite knowing that when you search, right, you will say a white shirt, right? You'll glance through all the other brands, brand A, B, C, D, who are offering the white shirt, but you'll end up buying maybe the brand X only, right? So we have to ensure that when a customer is searching for a white shirt, he or she should not leave the platform and say that, look, I don't have enough to choose from, right? Because one of the fundamental principles which we keep on believing is that customers will always want to choose from the widest range of products. They will possibly want to buy a product at a very competitive price, and of course they will always give a better weightage where there is kind of convenience, right? Where the convenience can be right in terms of payment methods, or if the opportunity to send back as a return or exchange, and so on and so forth, right? There are multiple ways how you can look at convenience, right? So in short, while I gave you a very long answer, I think in short, the process of onboarding vendors are very structured. Of course, there is a compliance angle, right, where we know that we have to do some basic ground check in terms of the GST, PAN, cancel check, and so on and so forth. On the operating part, the main part is that getting that vendor's catalog onboarded, which is a possibly a 40 odd step process, how the cataloging happens, then image of those catalogs, and so on and so forth.
And maybe with that, I can also ask you about how does working capital play a part in Cocoblu's growth, both from the receivable, inventory, and payable side?
Right, as I said, right, we are and operating at a working capital of around 850 crore, right? And as I started with, right, we are a 100% subsidiary of Ratan India Enterprise. So the group has infused 350 crore of equity. And of course, that, if you take the profit after tax, maybe it has now become 410 odd crore because of the accrual of the profits. So the balance of the money, right, which I'm just, for the simplicity sake, I'm just saying, say 350 and 850. So basically 500 is what we have raised as debt. And initial days when how the Indian system works, right? We didn't have a history of operations. So initial days, we had gone to the banks, and banks wanted history. We have gone to financial institution; they have wanted history, but we have been able to navigate through this because we also innovated our ways of fundraising, where actually Altgraph has come and helped us to scale. So our, while the growth is also dependent on the working capital, but what I am at least seeing, and I'm hopeful to see this uh, in times to come, is that I don't expect my working capital to grow in the same rate at which my sales are growing. So which essentially means that I will be more efficient in deployment of my inventory, which means that if I'm able to do X sales with Y inventory, I should be able to do X plus Z with Y minus Z, or Y minus Z1, kind of inventory, which means that I'll keep on optimizing my inventory levels, right? The second is that even if I see my inventory levels are going, I would possibly have more negotiation powers so that I am able to get a better kind of a credit period, from my vendors, right? So, and hence, I think this is the beauty of this business, right? Where we believe that there is a, huge opportunity for operating leverage, as well as my financial leverage over time is only going to get down, and kind of that's where the company is expected to grow in a better rate in the future days.
Understood. Uh, What are the key risks that you see in this business? I'm sure supply chain disruption is one, inventory risk is another. Then, of course, there is the margins due to financial
Mm.
uh, financing cost and otherwise, and the category compressions that might happen from time to time. But it'd be good to get a perspective on the risk that you foresee to the business.
Right. So I think as in any business, there is some kind of a business risk, right? And in our all foundational finance courses, we say that something is systematic, something is unsystematic, right? So I'm not talking about the systematic risk, right? Because that is something which we can't control, right? I mean, which could be because of some overall economic thing. But in any retail business, the risk is always, one hand, on the inventory side, right? That whether you're buying right, whether you're buying the right level, and that always stays, right? And that's why, as I said, that while the risk stays, what is important is that the organization flourish if they know how to mitigate, right? So at Cocoblu, we know how to mitigate the known risks, right? And which we know that inventory, if inventory risk is, one of the bigger risk in this business, we know we have ways and means to mitigate, right? So I'll just explain a couple of the mitigating risks, right? One is that why I said my inventory levels will not go in tandem with my sales is that we also have one model which is called as direct fulfillment, which means that we have got tie-ups with the brands where I don't buy inventory upfront, whereas when a customer places an order and there is a back-to-back through the system, the PO will go to the brand will raise an invoice, and my supply chain is efficient enough to pick that product directly from the brand's warehouse or the brand store. So, which essentially means that I'm not, deploying capital upfront. Rather, this model becomes a kind of a negative working capital business, right, for me. And in this case, this portfolio, right, over time, we see is that, increasing, right? Of course, it will never be 100%, but we have seen this to increase from 10 to 15% and, somewhat inching towards that, 18 or 19% something, right? Which is one way, right? Which is one of the time investment which we are doing as a leadership is to how to see how much kind of direct fulfillment can scale, right? The second thing, of course, are my overall planning cycle, right? Because the way we typically do our inventory planning, as many of the retail companies will do, is we have something called as open to buy, meaning which we have a rolling forecast, right? Where we say that okay, if I have to do 5,000 crore, and if I know my days of inventory should be say 100 days, I know that exactly how much I should buy, right? And if I know how much I should buy, say by chance in 1 month I have bought more, I always correct it in the next month because my days of cover is a very sacrosanct number because I can't go beyond that, right? And there is a recurring process through which we do the review, and of course these are also aided through the ML and AI tools which help us to get near to perfection kind of results so that we are able to again optimally run the company.
How do you see margin risk across all the categories? And you've had extensive experience in retail, so you would have
Yeah.
seen many cycles. How do you see that risk playing out?
See, I mean, again, as I said that this is a part of that systematic risk because that I can't choose what competition will do, right? I know that I have to build a sustainable business, which essentially means that right while my customer experience has to be at the upfront, right? But I'll take some calls which my P&L can absorb, and fingers crossed and touch wood that you have seen us that we have been kind of quarter and quarter kind of profitable. Of course, the profitability might be volatile because of the first thing which I was explaining about the period in which the event days has fallen, right? But we know that what we can do, and there will always be margin pressure. But as I said, that because of our scale, we are also able to have that economies of scale, and we are able to negotiate to get better margins, right? And hence, if you see that our margins, of course, right? I mean, you will never make a large margin improvement, but over time I think it can only get kind of better, and at the moment, fingers crossed, we have not seen too much of a kind of margin pressure which we are not able to recover, meaning like even there is a competition pressure, right? Of course, we have been able to sail through this, and where we have got a lot of brand support and so on and so forth.
And what are the typical margins that you target both at the gross and at the net at the EBITDA or PAT level?
So see, our PBIT percentage will be in the range of 1.75 to 2.1, right? And after interest and taxes and all, our PAT at least we have seen only 2 years, right? So broadly, we have seen it to range between zero point 0.6 to 1.1 is what it is. But we'll always be like a very profitable company. If you see life to date, till date, right? You'll see that we have around broadly 1% and at which our PAT percentage has been hovering.
One may be a naive question, but why would a brand come to Coco Blue and not directly go to a marketplace?
The answer is very simple, right? If someone comes to Cocoblu, right, or any other like a seller like us, that transaction for the brand is a B2B sale, meaning they can recognize the sale immediately. You have sold it to Cocoblu or the likes of Cocoblu, right? And if you're going to a marketplace directly, right, that sale is a B2C. You have to be dependent on the end consumer to buy, right? So even for any brands from a portfolio de-risking strategy, they will of course have players like Coco Blue where they of course I'm not saying they will shy away from the risk, but there's always a partnering, right? There's always a mix in which the brands operate, and there's a reason why Coco Blue exists because because of their tool, their capacity and so on and so forth. Or the other way also to think is that if you look from the customer experience backward, right, possibly for a brand, right, it is impossible to scale nationally because to scale nationally, there's a compliance. You have to need to have GST registration, you need to have PPOB, you need to have hundreds of other compliances, right? Right. Whereas from Cocoblu, because of the scale, we are able to deploy the inventory at the right places where the demand zones are, right? So which essentially means if you look into a particular product, right, and say there are two places from where we can buy, and say both the places the prices are same. Say there's a product X which is sold by a brand Y, and you are searching in both the places and you see the price is 100, right? Which means that essentially as a consumer you are indifferent from which portal to buy. The next thing as a consumer which I'll immediately see is that what is my delivery date, and say in one portal I'm seeing that order now get tomorrow, another order now get within 2 to 3 days, right? Where will I order? Always order for the first site, right? Why? Because if I'm paying by my card or whatever money, right, I'm forward deployed my money, right? So I will always want instant, kind of a return, in the sense when I say return, meaning I want the product much quicker so that I can consume and have that, kind of a benefit, right? So this is where I think Cocoblu has an ability to scale, and because of its ability to deploy their products closest to the customer, that's where I believe that we will always have a little edge from the brands directly. I'm not saying the brands have no capability, that is not the case, but there is always a room to coexist in this ecosystem.
And if I may ask, what's the outlook for the next 12 months? How do you see Coco Blue growing further?
Yeah, I mean, we expect to grow at 20-25% top line. That's what we expect. Right. And we believe that online is something which is going to stick, and we believe that we have entered this space at the right time. And yeah, I mean, we are seeing a reasonable growth in the next kind of 12 months, right? And right, we are already in March, so for the financial year 23-24, we have around 28 odd days to finish, and then possibly by April, May, by June 1st, you should be able to see how we have fared in whatever I'm saying. So we believe to, grow at the similar pace at which the market is going. Yeah.
And how does the interaction with the group work now? Now that you're a very significant part of the overall group, how does the management work? How does the governance sort of work? We could.
Yeah, I think the group is always there to give us any support which is needed when we initially started, right? I mean, the fact that they have infused a significant capital, we have got that support. Or initial days when our banking lines were taking some time, we have got that credit line from them. But most of the the management per se for Cocoblu is operating out of Bangalore, and the group always gives us some broader guidance, whether it is through the board meetings or we have, of course, reviews, right, which happens with the management, and that's guidance or feedback or how the future looks like. There will be some inputs which we take. Yeah, I think it's a good partnering, kind of I would say processes which work with the group, and we feel very comfortable with that. Yeah.
Perfect. Uh, Maybe a little bit of a cheeky question, but how's your experience been with AltGraph?
Yeah, I think as I mentioned, right? I mean, I answered this question much earlier than you asked actually. So I think, as I said, initial days, for Cocoblu, and this is how the reality of life is, right? While we had, data in Excel, and we were very confident, that we'll reach these numbers. And I'm talking about 24 months back. I had the similar kind of projections, but it was very hard for people to believe why you think so, right? And but we are scaling, right? We were able to demonstrate that. See, my sales is something on those similar lines what I was explaining, right? But because we didn't have history and didn't we were a new company, we didn't have a credit rating and all of these. We had a initial challenge, right? But I think these are the times when we have got significant support from companies like Outgraph, where we were able to raise the capital which was needed for us to scale, right? And it has been a very good partnering. I think the speed at which we have done deals or transaction, that has been very nice, and really appreciate that initial support which we have got, and which is still continuing. Just that the trust which was laid on us was immense at that point in time. And just by the way, I think it's important for us to know that we are now rated triple B by Fitch, right? Which is also one of the significant milestones which we were able to achieve even before 24 months of our completion. So, right, as I said, that we just completed 2 years now. But yeah, I think this last 24 months have been super exciting for all of us here, and we have also now audited numbers to demonstrate that what we believed in the initial days are also coming out true. Yeah.
It's been a wonderful partnership, and thank you for partnering with us quite early, even in our journey as well. So we are always glad to see companies sort of scale up and move on to other horizons in their journey, and then move forward in their own evolution. It's very exciting actually to see a company evolve through the credit ladder and move upwards. So the fact that you've now got a credit rating is wonderful. That also answers part of the question that a lot of our platform participants ask, saying, why does the pricing keep going lower? Because as the credit improves, the pricing will always keep lower. And I'm sure, Shramik, you would experience that, or you continue to push us in that direction, as it should be, as companies
Yeah.
mature. That's an eventuality.
Yeah, because I always maintain that, I mean, as you scale, right, you get economies of scale, and it is our job as as a management, right? You have to keep your keep on reducing that financial kind of leverage. When I say leverage, I'm not talking about the quantum of the capital, but the interest cost which keeps on hitting your P&L. That has to be as a proportion of your sales, has to broadly come down. I'm not drastic, but it has to show a path that we are in the path of the decline. Right? That's where the overall benefit lies, and that's where how your ROE can only get better, right? Yeah.
Uh, Maybe a good way to end would be if there are any anecdotes that you would like to share, because you've also seen event days, which are, I'm sure, quite hectic and leads to a lot of spike. And given your experience in retail, any anecdotes that you would like to share?
Yeah, I think I would say that this what you see the sales, right? One of the anecdote is that I mentioned it. We do possibly 3.4 orders a second, right? The During the peak, we actually do close to uh, 8 orders per second, right? That's how our peak goes, right? And the next point is that while we you know uh, see these outcomes, right? The amount of preparation which the team does, that is, I think, beyond imagination of many of us, and even for me when I was when I I mean kind of before I joined, I've worked in multiple organizations, but the prep which is needed is immense, right? Because you have to go through the rhythm of having weekly business kind of review of the inputs, right? Then continually having a 30, 60, 90-day plan to understand that where what could be the potential risk which can derail us from achieving those numbers, then huddle together. So there's a it gets very intense kind of during those days, because as I said, we are working with close to 40 lakh unique ASINs, right? Or what you call as SKUs. So imagine that you have to do the buying of that, you have to do the pricing, you have to ensure what the customers are getting as right. So that is what it goes. I mean, while I just said anecdote to be the number of orders we do, but what goes behind is pretty intense.
And any guidance on the overall e-commerce sector and how that's playing out? I know the last quarter for a lot of e-commerce sellers has been a little bit rough, but how do you see that space now evolving in India and its own journey over the next 12 months?
Right. I think I'll only quote what I'm also reading some of the reports of the market, right? So I think we believe that the e-commerce user base, right, will significantly grow from 200 million to 500 millions, right? That is, it is based on some of the industry reports published by agencies, right? We believe that again from the reports it says that the online shoppers, right, count will go from 120 millions to 220 millions, right? E-commerce size is expected to grow at a compounded annual growth of 24.3%, which essentially means that it will grow from 75 billion to 276 billion, right? And this will be also helped by the smartphone penetration, where we expect the smartphone kind of penetration to even get better from current 66% to 86%, right? And of course, this will also help to gain more traction on the e-commerce kind of penetration, which should go from 7% to 16%, right? So that's what we believe is where the market is trending. And if you see any of the reports and all, I think everyone is saying that online is going to stay, and we also believe the same. Yeah.
Any impact from the competition on Cocoblu?
Oh, see, I mean, as I said, right? I mean, I will not possibly talk about the systematic risk, right? Competition will always be there, and we have to figure out ways how to live with it, right? But as I will say that we put a lot of effort on things which are in our control, and I think that's where which is a key differentiator of how we run organizations. So if we start focusing on the right inputs, we strongly believe that we our processes work, our people work. So if you're working on the right inputs, you'll be able to get the right output. And hence we are not generally output driven. We focus that on the right input so that we get the right output. Yeah.
I think that's a wonderful note to end this evening on. We focus on the right inputs, drill down in the processes, work hard, especially on event days. That's a testament to you, to your team as well. So I would like to thank you on behalf of AltGraph and our team for sparing the time and for having this session. I'm sure our listeners and everyone who watches the recording would get a good insight into what Cocoblu is about and what's their journey has been. And anything from your side, Shomik, before we close the evening?
No, I think I would like to thank you, Prateek, and the AllGraph team for inviting me. And again, as I said, that I'm no one in this, like a stalwart in the industry to speak, but thank for allowing me to speak in the forum. And thank you for the partnership. And really appreciate for all the other viewers who have joined. Yeah, thanks a lot for all of this. Yeah.
Thank you. Thank you so much. Thanks to our audience for attending. If there are any pending questions, please do write to us and our team will reach out. Once again, thanks to Shomik. Thank you everyone for logging in. Have a good evening.